I think the potential is obviously much higher. Like if we replicate January's run up, we're in the tens of thousands of dollars a share, um, and that's possible. I mean, the exposure is the same. Those leap contracts, you got to remember, those were bought when January or last January, when GameStop was very cheap. So the exposure from those contracts is significant. They were bought before, a lot were bought before last January. Some people still have them from back then. The same leaps. Thanks, my good bean. Nvidia 330 USD, soon 1 trillion company. Crazy run. Yeah. Is Jimmy bouncing and buying back in? Looks like it's continuing to fail. This head and shoulders is probably going to play out back to mean or close to it, which is around here at 1250. I'm going to update Reddit because I've been a little lax on that today with all the questions and birthday wishes. So let me get to that real quick. Also, letting the stock run like that, if they do hedge properly for a moment, gets people to shake out of their options, right? People that were holding longer term contracts, testing this 220 offers them an opportunity to exit, right, and cash settle. So, is it a trick? Likely. And this is the beauty, really, in essence, of these long dated options contracts on GME, regardless, I think, of the strike, is that you are immune to the intraday movements of the stock. Um, like, like I had weeklies, so I got out, but on those long term calls, you have this like a $5 breakdown. You're not affected by it severely, right? You can just watch this price action play out, and then that makes it harder for them to manipulate people cash settling their options. And that's what they want, right? They want people to cash settle their options so that they can take that internalization and they can deleverage and they don't have to cover that exposure. It offers them so many advantages. But when we carry those options through these exposure Fridays into those exposure dates, that's where the real threat occurs. Everyone's always talking about how we end the week at max pain, but what's more important is where we start the weeks, right? Because the exposure dates always occur on Mondays, Tuesdays, Wednesdays. Um, we don't get exposure dates on Fridays. And that's a tactic for pricing us out of options, um, by forcing us to buy, uh, to profit. You have to buy longer dated contracts, because if you buy weeklies and they expire on Friday worthless, you just lose money. So I mean, that's like when people talk about how you're giving Citadel money. That's the way in which they milk the money from retail buyers. Um, You see this played out very well on a stock where they have a little more control over the manipulation, like over on AMC.